Hey everybody, Jason and John here for your taxshield.com, sponsored by Wealth by Design. Jason, thanks for sitting down. I know it's been a week. We had some trouble here on my side, but things are back to normal. So I want to say thanks for taking some time with us today.
John, as always, I appreciate you.
You bet, man. So we're going to go over a few things today. I got a couple things on my mind that I want to pick your brain about. Let me bring up my notes here. Um, I noticed over the past couple of weeks that the bond market has been a little crazy. So I'm gonna kind of start there. There's a few more things I want to talk to you about, but let's get you started there because I know you've got some words of wisdom on that. So let's talk about the bonds.
Yeah, I hate to. Oh, let me start off. Please, if you find any entertainment or educational value in this at all, please like and subscribe. It helps us help you. And we are, excuse me, we are not financial advisors. Always do your own research.
Yes, please.
This is some powerful lemonade. I mean, confident.
Is that what we're calling that?
It actually is. It's like-
I'm teasing. I'm teasing.
So yeah, I hate to keep patting ourselves on the back, but we called this about 7 months ago, where
Yep.
the bond markets eventually would start. I think they would break this bad, to be honest with you, but we did think they would break. So in the last couple of weeks, in Japan, the UK, most of Europe in general, the bond markets have broken. A week and a half ago ish, there was a day on the Japanese bond market where there were no bids, which meant
Wow.
no bonds were sold. And the reason why that was is because Japan's kind of gotten themselves in a situation where the value of the yen has fallen so far,
Right.
and they haven't been increasing interest rates because they can't, that now the bond markets are the last thing to go. And eventually, the Japanese government said, look, they were setting a floor.
Mm-hmm.
So if bonds went down to, say, X price, they would come in and scoop it up. So it would let investors know that, hey, look, no matter what, this is as low as it will go.
Right.
And UK did the same thing. And what happened was in the UK, they did it for like a week, and then they said, hey, they gave investors a 3-day warning that, hey, look, in 3 days we're going to stop doing this, and the whole world freaked out. And just let you know how dire it was in the UK. Pension funds were literally hours away from becoming insolvent.
Wow.
And just bring this home to you guys, how crazy this is. Like, this is nuts. Historically, over the last 100 years, if you had a very conservative, responsible portfolio, it was called a 60-40 portfolio. So 60% stocks and 40% bonds, well diversified.
Right.
And bonds over the last 100 years have been the most safest play on earth, even during bear markets. That's why you have it in the 60-40 portfolio, because in bear markets it does well.
Right.
And now you're seeing that break. The most conservative play on earth is breaking.
Right.
And so it's pretty nuts. So, it's forcing the world's governments to pivot.
Right.
So in Europe and in Japan and other countries, they're starting to print money again. They're not increasing interest rates, and they're printing money. They're starting to do exactly what they did during COVID.
Right.
Print money, which got us into the problem of inflation.
Right.
So if you just think about it for a second here, we have out of control inflation.
Mm-hmm.
They're saying it's like 8 point something percent.
Right.
Some parts of the globe are saying it's as high as 30, but really you can double those numbers because all those numbers are friendly versions of the real numbers,
Right.
So you can speculate that the U.S. government's going to also pivot.
Mm-hmm.
Today, Canada came out and announced they're doing a 50 basis point interest rate hike.
Wow.
And historically, we tend to follow what they do. They just do it before us.
Yeah.
But if you read their minutes, and that's how boring my life has become. I'm reading Canadian Federal Reserve, minutes.
No judgments. No judgments.
But they were supposed to do 75 basis points, and now they're doing 50. So, yeah, as of yesterday, most Americans or most investors were at 98% tile that we're going to do a 75 basis points on November 2nd. But now that we've seen Canada do the 50 basis points, there's a good chance that we'll do the same. And that lets you know how dire the situation is. Because up till now, the Federal Reserve and Jerome Powell have said, no matter what, we're staying this path. No matter what, things are going to break. We don't care. No matter what, we're going to keep increasing interest rates until inflation gets under control.
Right.
But now things are starting to break. and some super dangerous things are breaking, like the bond market,
Yeah.
which forces their hand. And this is super scary stuff, John. Like as an investor, I want to see a pivot, right?
Mhm.
Inflation doesn't bother me so much,
Sure.
but for the middle class and the poor,
Yeah.
inflation is devastating. And it can drown economies. It can ruin economies.
Well, and you're sort of answering my next question, which is, as a guy who, I do a lot of things in crypto and some other stuff, but I don't really mess with bonds per se. How does this affect Joe Blow on the street?
That's a great question, John. It really is. I'm glad you asked it. Bonds are the lifeblood
Mm-hmm.
of the global economic system.
Yeah.
You don't really notice them because most people don't invest in them, but who does invest in them is pension funds, retirement funds, corporations, nations hold other nations' bonds.
Right.
It's the lifeblood. And you shut that down and economies are just done. You shut that bonds down and currencies are dead.
Mm-hmm.
It's extremely alarming. And here's what shocked me the most, John. Like, I was just curious when that whole thing happened with Japan's market freezing.
Right.
I asked my wife if she heard anything about it because she watches, basic news, and she said no. So I just went through some of the channels and started searching it, and no major news channel covered it.
Wow.
It should have been on every news station. It should have been. This is alarming. This is scary. If it's happening there, it's going to happen everywhere else. Japan's just a little ahead of the curve, but it has now spilled over into Europe, and then it will spill over everywhere else. Japan got so desperate they sold. What was it? I want to say something crazy like $90 billion worth of U.S. debt,
Jeez.
and started buying back their own the yen in order to stabilize it. And at first it did increase the value of the yen by like 3%, and then like a day later it went back to where it was on a negative level.
Yeah.
So it's like they spent $90 billion for nothing. This is how we said this on our last episode that desperate countries are doing desperate things.
Mm-hmm. Yep.
And America holds all the cards right now. They really do. It's our Federal Reserve increasing interest rates that's putting so much pressure on all these other nations. And it's going to be interesting what happens in the next week and a half to see what our Federal Reserve does. And if they come out on November 2nd or 3rd and say that they're increasing interest rates by 75 basis points, it could be a death nail in a lot of other economies. If they say they're coming down to 50 basis points, it lets investors know, hey, maybe it's time to get the money off the sidelines and get it back in assets.
Yeah.
So it's very interesting.
So along those lines, something I just heard today, and it was just in passing, I didn't do any deep dives on it. They're talking about in sometime in 2023, mortgage rates coming back down to about 5.5%. Is that even on your radar? Or is that just wishful thinking? Or is that maybe some messaging before this sort of big election that we have coming up on the 8th? It's a lot thrown at you at once. Yeah.
I'll be honest with you. Nothing would shock me at this point.
That's true. Yeah. Mm-hmm.
So if we come out and say we're only increasing interest rates by 50 basis points and the global bond markets and the global real estate markets continue to break,
yeah,
you will see the Feds pivot much harder, much faster.
Okay.
So it's really anything's on the table. Like me and you, we claim that our estimate by end of this year would be 9 to 10% 30-year mortgage.
Right.
I think right now we're at 7.25%, for perfect credit 30-year mortgage. So we could end up there,
Well, in terms of the rates, I was looking at just a local bank of mine. First time homebuyer right now is 8.375 with no points. So
yeah.
That's I mean, it wasn't even that high when I was a loan officer 15, 17 years ago. We were at 7 maybe, so this is new to me too. I know there's probably a lot of folks that listen to this that were around buying houses in the early to mid 80s when 13% was not unheard of, but not since I've been an adult. So that's a little spooky, a little scary.
just imagine about the consequences of that. So
Mhm.
I imagine right now, like refis are down like 100%,
Oh, for sure.
right? Because who on earth would ever refi at this point?
Yeah.
So how much of that? So that has to affect the banks and their
Yep.
profitability. Me and you were both in the mortgage business at some point in our lives.
Yep.
It's one of the major money makers for banks. It's top of the list. You take that, and that will reflect on their stock and
For
their
sure.
stock evaluations. And if you start hearing these words commonly spoke, get scared.
Yeah.
Sovereign debt crisis.
Okay.
Most people probably have never heard those words before, probably because
Mhm.
they've never needed to hear them.
Right.
But if you start hearing those words, that's time to really get fearful.
Yeah. Yeah. I mean, and not to keep harping on the mortgage thing, but one thing I wanted to bring up on that I was reading today. National Mortgage Association, I think they're called, gave a statistic saying that mortgage applications, regardless of their purchases or refis, are at the lowest level since 1997. And that includes the housing crisis of '08, '09, 2010. So
Yeah.
that's
So the October
crazy.
numbers haven't come in yet, but I know in September there were 60,000 housing contracts canceled in America. So that's people that were in escrow, people who had
Hmm.
arrangements. They walked. And in the month of September, housing went down by over 10%.
Wow. Yeah.
That's traumatic. A bad month is like going down 1 or 2%.
Yep. Yeah.
10%.
It's a big chunk,
That's
man. Yeah.
and that's not even like you haven't even heard people start screaming about the housing market collapsing yet, but it is happening right in front of our face.
Right.
I know in my neighborhood, houses aren't selling at all.
Yeah.
You know,
Where I'm stationed, lots of red line price drops. There's still a very active amount of people listing, but they're dropping them quick. They're on the market for 2 or 3 weeks, and then all of a sudden, 10,000, 20,000, $30,000 drops. So
yeah.
yeah, I think the writing's on the wall for them. Let's pivot a little bit before we get out of here. How is everything we're talking about today? How are things? How is that sort of spilling into, or is it into the crypto market?
That's very, very interesting, John. So Bitcoin's held very strong at around 19,000, 20,000, even though bond markets are collapsing,
Yeah.
stock market's doing horrible. And this has been like 3 or 4 months of where it's just kind of hanging out at 19,
Mhm.
20,000, even though everything else is just all over the road. And I'll tell you something very interesting. When I saw this stat, I had to double check it because I thought it was made up.
Right.
So each asset class has a variance a variance statistic that shows its level of volatility.
Okay.
Historically, crypto and Bitcoin has been the most volatile because it's the newest, riskiest asset class. In the last month, maybe 2 months, crypto and Bitcoin's volatility has been less than that of currencies, bonds, and stocks.
Well,
Now, just try and wrap your head around that for a second. That's how much that's how much has changed in the last 2 months. That what used to be considered the most riskiest asset has become the stablest.
wow.
And there's some reasons why I think that's going on. So as nations struggle, as things break, they have to look for solutions.
Right.
Russia and China or they legalized cross-border transactions via Bitcoin. And they're doing that to avoid U.S. sanctions, right? And then today, the UK just came out and announced or passed a bill. I'm not sure how it's worded, that they recognized crypto assets as financial instruments,
Okay.
which more or less means they're saying, hey, look, okay, we accept it. It's now being regulated. Let's
Right.
move forward with it.
Yep.
And I forget what position. Remember the lady who just got fired and she was in office for like 2 weeks in Britain?
Yeah. Trust. Mm-hmm.
Strauss. The
Yeah.
guy who replaced her
Mm-hmm.
is extremely crypto friendly.
Yes.
Like that's his whole selling point.
Mm-hmm.
So things are changing
Yeah.
very fast. I think the world's waking up.
Mm-hmm.
Bitcoin's extremely scarce in a world where money's printed off to oblivion, where assets like stocks and bonds are breaking.
Mm-hmm.
People need to change their mindset. I promise you, 5 years from now, you're not going to recognize this global financial system. Right. It will be completely different than it is today. Mm-hmm. And if I were to guess, Bitcoin is going to be extremely valuable 5 years from now.
No doubt. No doubt. Yeah. Jason, a lot of info. I love this stuff. I love picking your brain. Yeah, you and I get along so well because I get where you're coming from, man. And you do the research that I don't think I could sit through and do. So I appreciate you, man, that you always bring great stuff to the table. So we'll do another one of these very, very soon, and I'll have more questions for you.
John, as always, I appreciate you, brother.
All right. We'll talk soon, man.
Will do.
All right. Take care.